What's up, everybody? Welcome back to The Contrarian. My name is Logan. Today I will be talking about gold, silver, and just how I see gold and silver playing out in the next few years. And gold has mainly been the major attraction over the last few days because it's seen large inflows as a result of the global tensions going on between Russia and Ukraine. Gold actually just recently today, as I'm recording this, it recently broke $2,000 an ounce for the first time in about a year and a half. So gold has really rallied very strongly in just the last couple of weeks since Russia invaded Ukraine. Silver is still kind of in consolidation stage, so it's not entirely clear yet on silver, but it's also rallied pretty strongly in just the last couple of weeks. And the miners have also posted some gains, but they're still way behind gold and silver. So the main question that needs to be answered is, what is likely going to happen for gold and silver in the longer term? So looking past the current tensions with Russia and Ukraine, and maybe some other tensions that might arise with China and Taiwan, what's likely for gold? And obviously this, longer term picture has been what I've been focusing on for the last 10 months or more. I've been focusing on the real fundamentals for gold and silver and just focusing on them as inflation protection assets. Obviously, inflation has been a big story for the last year or more. Actually, just recently, inflation has really begun to break out a lot higher, and with energy prices going as high as they've gone as a result of Russia and Ukraine, it's only a question of just how much higher inflation goes in the shorter term. And in the longer term, it doesn't look like inflationary pressures are really going to ease very much either. So that's obviously a very bullish case for gold and silver, and especially with global tensions just shifting as much as they have recently. This has also sent arguably a large amount of people just going into mainly gold as a safe haven. It's probably the most safe haven asset out there. Basically, gold and silver, especially physical gold and silver, it's basically the only asset you can own that is not someone else's liability. So that in and of itself makes gold and silver, the physical metals, the most safe haven asset that one could own. But also, it's probably likely that gold and silver have seen some inflows due to stocks and also cryptocurrencies losing popularity in the last 6 months. Obviously, crypto is down somewhere 40% off its all-time highs just looking at Bitcoin. But stocks in particular have also not been doing well in the last 6 months. So it's probable that this is another reason that has just contributed to some marginal buyers switching into going into gold and silver, and maybe some miners as well. So until Russia and Ukraine, Wall Street was fairly negative on gold and silver. That's beginning to shift some. Some institutional buyers have raised their price targets, some pretty considerably. So that's a good sign that price targets are beginning to reflect a bit more different of an outlook. Previously, it was forecasted that the Fed would be able to get inflation under control more easily, that they would be a more aggressive inflationary fighting force, that they would actually try to rein in inflation with rate hikes and tapering their asset purchases. But now that's beginning to shift a little bit. And that is almost more importantly what I would focus on personally, is I'm looking for the narrative to shift in terms of what the Fed is willing to do on inflation. Is the Fed actually going to raise rates anywhere from 5 to 7 times of 25 basis points in this year? That's kind of the particular narrative that if that shifts, I do think that the outlook on gold and silver would shift very considerably. So if, for example, in March, the current month, so if, in a few days, Jerome Powell comes out and says, we're going to do a 25 basis point rate hike, right now in March, but we're not actually going to do as many as we previously were forecasting in, the remainder of 2022. So maybe they only end up doing, 3 or 4 25 basis point rate hikes in 2022. And, maybe they really don't end up actually tapering their asset purchases very much, which they still have yet to go ahead with actually tapering their asset purchases. They're still, from what I can tell, from what anyone else has access to, they're still purchasing close to or at 120 billion in asset purchases per month. So that's a very significant buyer that the Fed is stepping in as in the market, particularly with treasury bonds and things like that. But basically, if the narrative begins to shift around the Fed and the Fed's ability to fight inflation, that could be a major sort of a change in the broader sentiment out there with regards to gold and silver. So even if the whole Russia and Ukraine situation goes away entirely, which I think all of us would very much like for that to be the case, that it just is resolved very quickly and ceases to be a major issue, even if that goes away, I don't see the major fundamental reasons for gold and silver going away as well. Now, obviously, in the shorter term, that would mean that gold would likely retest a lot of the sort of key levels that it's broken through. So I might look for gold to fall as low as 1920, then maybe 1850. These are some kind of key levels that gold has broken through, at least with regards to the US dollar. But it's also important to keep in mind that gold, in regards to other currencies, for example, the Russian ruble, Chinese yuan, even other currencies such as the Japanese yen, gold in some of these cases has broken out to new all-time highs. So it has yet to make new all-time highs on the dollar, but it's a little predictive in terms of gold moving to new all-time highs with other fiat currencies besides the dollar. That dollar might be soon to follow. So in the nearer term, it's not unthinkable that gold could just continue to rally here in the next few weeks if Russia and Ukraine continues to be a major point of concern for the markets. If inflation continues to rise in terms of expectations, particularly related to energy, so if energy continues to break higher, that could play into the whole inflation narrative, and that could also power gold a lot higher in just the next few weeks. But in the longer term, it's ultimately these fundamental reasons that I do think is a major tailwind to gold. It's kind of a question of when the broader narrative can shift with regards to just the Fed's willingness to fight inflation, also with people maybe beginning to realize that inflation might be a much more sticky situation for the Fed to try to fight, and already with the broader stock market, more importantly with the credit market, the Fed might not actually be able to actually raise rates as much as the market is thinking. So all this being said, this is kind of my personal thinking with regards to gold and silver right now. It could see some more upside in the near term, just with the current catalyst that's been pushing it higher of geopolitical conflict. Hopefully that begins to go away, but if it doesn't, that could provide some major tailwinds to gold. But in the longer term, it's these more fundamental factors that I see driving gold and silver a lot higher. Now, one important thing I will point out is that the miners really have a lot of catching up to do. We need to look back at a 10, 15-year chart to really put in perspective how undervalued these companies are. Looking back at GDXJ, for example, and comparing that with price of gold, it can be seen that the miners have massively underperformed gold. So this is more where I'm a lot more optimistic, is sort of playing this catch-up trade with the miners. But that's just from my stance. I'm not giving sort of any recommendation to any of you guys out there. So all this being said, if you liked this video, just consider subscribing to this channel. Give it a thumbs up. If you didn't like it, give it a thumbs down, and let me know why down in the comments section below, and I hope to see you again at some point.